Financial Simplicity, Part 26, Beyond the Basics, Non-Registered Accounts and Asset Placement. Once you've maxed out your RRSP and TFSA, the next step is often a bit unclear. Where should your money go next? The answer: non-registered accounts, also known as taxable investment accounts. These offer flexibility and liquidity, but they come with a new layer of tax considerations. Unlike registered accounts, non-registered investments don't offer tax shelters. You pay tax on interest, dividends, and capital gains as you earn them. But that doesn't mean they're a bad option, far from it. In fact, for long-term investors who've already filled their tax-advantaged accounts, they're a powerful tool when used strategically. The key is asset placement, deciding which types of investments belong in which types of accounts. Why? Because not all investment income is taxed equally. Interest income, like from GICs or bonds, is fully taxable at your marginal rate. Capital gains from selling appreciated stocks or ETFs are taxed on only 50% of the gain. Canadian dividends receive favourable tax treatment. Foreign dividends, however, are fully taxable and often subject to withholding taxes. So, if you hold interest-generating investments like GICs or bond funds, they're best placed in your RRSP, where taxes are deferred. High-growth investments like stocks or ETFs, they can work well in a TFSA for tax-free gains, or in non-registered accounts where capital gains are taxed more gently. The TFSA should be reserved for your most aggressive, high-upside holdings whenever possible, since that growth won't be taxed at all. For those with significant savings, strategic asset placement can save thousands in taxes over time, without changing your actual investment mix. It's not just about what you buy, but where you hold it. A financial advisor can map out which investments belong in each account type based on your risk profile, goals, and tax bracket. They'll also monitor when it makes sense to transition certain assets between accounts as your needs evolve. In the next part, we'll zoom out and take a look at the different types of investments available: stocks, bonds, GICs, real estate, commodities, and more. Ready to take the next step? Start the conversation at greenhelixfinancial.com.